All right, let's dive in. Today, we're going to decode the technical story behind one of the most watched stocks on the market, NVIDIA. We're going to break down the charts, piece by piece, to figure out what the data is really telling us right now.
So everything we're about to talk about, it all revolves around this one number, $187.54. That's the closing price for NVIDIA. And you could think of it as the main character in our story today.
And here's where the plot thickens. The story has this classic tension. You see, the overall long-term trend for the stock, it's positive, it's bullish. But in the here and now, it just seems stuck. It's waiting for some kind of catalyst, some kind of spark to get it moving again. So, to solve this puzzle, we're going to assemble 5 key pieces of evidence. First, we'll look at the big picture market position. Then, we'll check the engine's momentum. After that, we'll map out the trading battlefield, look for any warning signs, and finally, we'll put it all together for the technical conclusion. Okay, first things first, we have to build our foundation. Before we get lost in the day-to-day noise, we have to understand where this stock stands in the grand scheme of things. This is the big picture. I want you to think of these moving averages as the stock's center of gravity over different time frames. And what do we see? The price is trading above its short, medium, and long-term averages. Being above all three is a really strong positive sign, but being this far above that long-term 200-day line, well, for an investor, that provides a really solid foundation of confidence. It tells you the stock's underlying health is just solid. So the most important thing to take away from this first part is this. No matter what else is happening day to day, the underlying long-term trend for NVIDIA is healthy. It's pointing up. That structural bull market is absolutely intact. Okay, so we know the car is fundamentally sound, but is the engine actually running? Let's move on and see if the stock has any real power behind it right now. Is it revving or is it just idling? Our first tool for this is the Relative Strength Index, or RSI. And honestly, the best way to think about the RSI is like a car's RPM gauge. It tells you if the engine is totally redlining, which we'd call overbought, or if it's barely turning over, what we'd call oversold. And for NVIDIA, that RPM gauge is reading 54.79. It's not too high, it's not too low, it's right in that perfect neutral middle zone. And this is why that middle number is so important. Because the stock isn't overbought, it means it has plenty of fuel left in the tank. It could rally higher without hitting that red line and running out of steam. It's in a healthy sweet spot, just waiting for a potential move. But just because the engine has room to rev doesn't mean it is. For that, we turn to the Average Directional Index, or ADX. This thing is our trendometer. It doesn't care if the trend is up or down, it only tells us how strong that trend is. And here is where our story gets really complicated. The ADX reading is just 12.76, and that is a very, very low number. So here's the crucial takeaway. Any ADX reading below 20, it basically screams that there's no real trend to speak of. The stock is just chopping sideways, completely stuck in a range. So while the long-term picture is bullish, and the RSI shows us there's room to run, right now there's just no power, no momentum. It's a frustrating spot for anyone waiting for a big, decisive move. So, knowing the stock is just chopping sideways, what we need to do now is map out the battlefield. What are the specific price levels that are boxing it in? Let's take a look. On this slide, you can see the key lines in the sand. Resistance levels, up there around $188 and $192, those are the ceilings the price has to smash through. And then you have the support levels, like $186, acting as the floor that needs to hold. Right now, the price is caught smack in the middle of this fight. Now, if we look at volatility through another lens, something called Bollinger Bands, we get a little clue. The price is hanging out in the upper half of its trading channel, and that suggests that if a move does happen, the path of least resistance is up, towards that key ceiling right around $193. Okay, now before we get too optimistic about a breakout, we have to do our homework and look at the other side of the coin. Let's dig into the indicators that are flashing some potential warning signs. And this right here is a fantastic example of how technical analysis is more of an art than a pure science. We already know the RSI is neutral, which is great. It means there's room to run. But another indicator, the stochastic oscillator, which is way more sensitive to short-term moves, is in the overbought zone. This hints that a little dip might be coming first. As an analyst, you have to weigh these conflicting signals. And here's another clue that really reinforces this whole story. It comes from the stock's beta, which basically measures how much it moves compared to the overall market. NVIDIA's is surprisingly low, at just over 0.6. And what's really fascinating here is that for a high-flying, exciting tech stock, a beta this low is, well, it's unusual. It means that right now, NVIDIA is actually moving less than the market as a whole. It's behaving defensively, which fits perfectly with our theme of a stock that's just consolidating and taking a breather.
All right, we've gathered all the pieces. We have the strong long-term trend, the weak short-term momentum. We've mapped the key price levels, and we've looked at the warning signs. Now, it's time to put this whole puzzle together and see what picture it makes.
So the final verdict from the technicals is a phase of bullish consolidation. Why? Well, it's bullish because that long-term trend is still pointing up. But it's consolidation because the short-term trend is flat, just coiling up and lacking any real energy.
So what does this all mean for someone watching the stock? Well, first, the big picture is still a source of confidence for anyone holding for the long term. Second, if you're looking to get in, an ideal entry might be on a dip, maybe closer to that $182 support level for a better risk/reward. Third, the big signal everyone is waiting for is a strong, high-volume close above $193. And finally, just be aware that a little short-term pause isn't out of the question.
And that brings us to the final, big question that this whole analysis leaves us with. We know the underlying trend is strong, but that immediate momentum is weak. So, is NVIDIA quietly building up potential energy for its next massive launch, or is it just stuck in neutral, going nowhere fast? The answer, as always, will be written in the charts.